What is up, Hot Take Nation? It is the Hot Take or your commute for the week of March the 9th. We're doing a video that we're going to put up on YouTube. This is the first one from the studio. So if for some reason my voice is not enough and you need to see the video of it, you can find that on our YouTube channel. Today we are going to talk three things. Obviously, coronavirus. I'm going to kick that one down to the end of the show. We're going to talk about that. There was a really good podcast that we released. If you haven't heard it, with Jigger Shaw, came out on Saturday, talking about alternative energy, solar, wind, nuclear, subsidies, pricing, the U.S.'s role in world energy policy. I thought it was great. It was one of my favorite conversations. He's a super neat guy. He hosts the Energy Gang podcast, which if you don't listen to, you should. But today we're going to start with OPEC and what happened on Friday. So I think, there's a lot of speculation around supply and demand. It is amazing. The whole world comes down to a supply-demand economic. And in the world, we produce around 100 million barrels a day. We consume around 100 million barrels a day. And there is an argument based on surplus capacity that there is a lot more oil production capability than we're currently using in the world. So let's use some examples. Libya is down about 1 million barrels a day with unrest there. OPEC Plus has already cut 1.7 million barrels a day. That's how they've stabilized prices, which before the coronavirus looked like oil was going to be about 60. And we're going to talk about that. Venezuela's down about 1 million barrels a day with sanctions. Iran is down 2 million barrels a day with sanctions. Now, any of these can come back on at any time, and so the world feels oversupplied, potentially, if OPEC isn't cutting, which is why OPEC has played such a large role in controlling the oil markets over the last, multi-decades, but certainly since 2014 and then again in 2016 when they cut. And speculation going into the Thursday-Friday meeting was with coronavirus. There's a question about how much world demand is down. When we had Aegis on the podcast, we were down 3 million barrels a day. It was the estimate out of China. That's because they import 13 million barrels a day, and their refining had cut 3 million barrels a day. So I think the world felt like 3 million barrels a day of instantaneous oil demand had been cut from China. The coronavirus reaction, and I want to talk about that, but it has shocked the world. And so if we're down 3 million barrels a day of consumption, and we assume that this coronavirus reaction runs for much, much longer, the world has nowhere to put this oil unless you shut it in. And on Friday, the Russians did not agree to an incremental 1.5 million barrel a day cut, which we don't know, but it sounded like people wanted Russia to cut 500,000. And the OPEC and other allies, or the OPEC allies, would cut 1 million. The Russians said no dice. Now, in my post where we talk about anti-frac is anti-America, we talk about the Russians' role and my view that in 2013-14, the role that OPEC played to increase production and crush oil from 100 to 30 was part of the sanctions that the U.S. had put on Crimea, and that had led to the interference in the 2016 election, arguably the election of Trump, and 3 weeks after his election, OPEC cuts production. And so to me, that was a Russia thing. And now in 2020, with lots of rumors around Russia and anti-frac and who benefits if we have no fracking in the United States. Well, obviously Russia, they're the number 2 oil producer in the world. They will be number 1 in no time, with or without fracking, because we are on decline. However, with the current price scenario, and to me, it's obvious Russia was not going to cut production, because this is the ability to deliver a death blow to the U.S. shale. And we've talked about crisis of balance sheets. What does that mean? Equity can trade down to zero and the company can still go, because you don't have to pay back. And so, yes, shareholders can sell, they can panic, they can crystallize their losses, and $0 share is not a good place to be. And at the rate we were dropping last week with kind of 10 to 15% a day, we're headed there really, really fast. But the real issue is the debt. And as cash flow is crushed, a lot of the companies came out in Q4, February earnings, saying we have a cash flow neutral budget at 55. We have a cash flow neutral budget at 50. We have a cash flow neutral budget at $2.50 gas. Well, I'm not sure if you're aware, gas is $1.70. Oil was $41, down 10% on Friday. No company has free cash flow at these levels. And debt comes due in 2020, 2021, 2022, 2023. We had Brian Lestrap on the podcast from Moelis & Company, which will come out, I think, next week or the week after. And we talked about the process of bankruptcy. And really, they're, with RBLs, the bank price decks that they're using are so low that anyone who has any debt that's coming due, they simply don't have the cash. And if they can't pay the cash, then the creditors can force them into bankruptcy. In bankruptcy, a whole bunch of things happen, but effectively equity is wiped out. And our entire industry is structured around a $55 to $60 price. When I said lower for longer and low commodity prices was not the crisis, it's a crisis of balance sheets. I will now say at $41, it is a crisis of low commodity prices, specifically because it's a crisis of balance sheets. We are on the verge of death. Make no mistake. And if boards of companies are not meeting all this weekend to come up with a plan on how they're going to survive, those boards need to be fired. Those management teams need to be fired. This is not business as usual. This is not sit around and, we'll just continue completing. We have a long-term plan. We can go for 5 years. Exxon is down 40% year over year. 40. Diamondback over 50. Oxy over 59%. I mean, you could just run through the list on rbcrichardsonbar.com and look at all the stocks. I mean, it is a bloodbath. And Russia, make no mistake, is putting the death blow onto U.S. shale. And so all the Twitter guys that are the anonymous FinTwits that have been short shale and think shale's a disaster and shale's a Ponzi scheme. And you know what? I certainly, I've said 95% of companies are overvalued at 60. At 40, 100% of companies are worth zero. And so if you believe oil stays at 40, if oil goes to 35, if oil goes to 30, I mean, the reality is the U.S. sector in terms of equity value, it's just gone, all of it. And so we need to react. And each individual company needs to look at its own best interest, but it needs to understand that fundamentally this is a supply-demand problem. And when we spend hundreds of billions of dollars in CapEx every year to continue to bring on wells, and when 3.8 million barrels of the 12.8 we produce in this country are from wells that came on in the last 365 days, a shutdown in activity for 6 months will ensure that oil declines 1.5 million to 2 million barrels a day. We will never be able to catch up and undo the decline. And therefore, 1.5 million barrels comes out. If the coronavirus passes, and it should, and it will, because people are going to start going back to life. I mean, I think what the biggest fear is, you sit beside someone on a plane who may or may not have had the coronavirus. I found out that someone came through Denver on February 29th, went up to the mountains. I was coming back from Scottsdale on February 29th. So we were probably in the airport at the same time. And, maybe I have coronavirus. I have no idea. I don't feel sick, which is part of the problem with this disease, is they say 80% of the cases are so mild, you have sniffles, coughs, whatever. But what if it's 98% of the cases are so mild and that people have it, don't even know, they don't get checked? There's no tests that you can do in the US without sending your blood in to get it tested by the CDC. And it's latent for a long time. And yes, certainly, if you're over 60, there's more risk. But then 60-year-old people should be, if they're worried about it, wash your hands, quarantine yourself. But the data is so bad around, is it a 2% fatality rate, which would make it 20 times more lethal than the flu? But it started in China. The fatality rate for men who are over 80, who are smokers, is 18%. Okay, smoking. Pollution in China is bad. The air quality is bad. The lungs are bad in China. And so we're translating this. We don't even know who the cases are. We don't have a test for it. Clearly, it's in the U.S. because now we're seeing it in other cities. It's been here for weeks. In China, the number of cases are declining. The number of deaths continue to be in the 45 to 50 a day. And nonetheless, the world has shut down. Airlines, I mean, it's the best time to fly. I'm going to Fort Worth March 25th, $45. $45. I'm going to Phoenix, 100 bucks, going to Midland, 300 bucks. I have not seen prices like this because airlines are like struggling to survive. You want to talk about a crisis of balance sheets. Historically, airlines are as levered as any business, and they are just simply not built for a demand shock like this. And so what happens in a week or 2 weeks when we all wake up and say, look, it's going to go through, it's not going to go through. And Jigger made a good point after the podcast that the real issue is we're just trying to slow it down for 9 months till we have a vaccine, because if the fatality rate is 20 times higher, depending on how many people really have it, and we can't test for it, and we don't have ventilators, and we don't have beds, do we overwhelm the healthcare system? And so we're just trying to slow it down. Okay, but at what cost? At what cost? How? I have a friend who has a bike business. He imports parts from China. He's been working at it since I've known him for 13 years. Finally has momentum. And now his supply chain is shut down. And this isn't about should he be making in China. Of course he should be, because you get goods that are cheaper in China. And as U.S. consumers, we demand that prices are low. So we build this supply chain, we build this business, we build this brand, we invest all this time, all this money, all our lives, our livelihoods are invested in this. And in the last 2 months, we just say, nope, everyone just stop. And if you had debt that was based on something, sorry, this isn't a recession. You're not going to have any time to react to it. Just everyone stay in your house. All products stop. And then you have the hoarders, which, quite frankly, why wouldn't you? But beans are gone. Cans of soup are gone. Toilet paper, really? Like, I don't get that. And bottles of water, which again, like, what is the water supply getting infected? I'm staggering for words. But coming back to the oil price, oil is 40. Reading stuff this weekend, it looks like people think oil could go to 20. The reality is we are burning inventory that make America not energy independent, but certainly energy independent-ish. And we are burning inventory that is worth zero in order to maintain production and maintain debt. And each company has to survive their own way, but there needs to be something done right now at Oil 40 collectively, because we are the marginal producer and we are about to be knocked out of business. And if America's industry goes to zero, we have a very, very large problem. So yeah, I know, Oxy, you didn't want to cut the dividend, but you're going to have to cut the dividend to zero. I think that bolsters your balance sheet. If you're giving cash as a dividend, you have to cut it. This is not business as usual. And there's no mistake. Like, there will be no egg on your face for saying we had to cut it. Oil is $40. I made my investment thesis that oil was going to be 60. So I was wrong, and I'm getting crushed by owning the stocks that I own. And I still think the stocks I own relatively, with their debt maturities and relative value, are better off. But at oil at 40, there's zero. I can't sell because I don't believe oil should stay 40. Oil could go to 30. These stocks could go to zero. This is why the market is so tough. So, yeah, I mean, that's where we're at. We have to react. So, number two, I was at Oxy this week. Vicky came by. I was just honored, I have to tell you. And my opinion of her continues to be very strong. I know Jim Cramer came out and tweeted on Friday that the Oxy deal was the worst deal of capital destruction. And he used a $57 billion deal is now worth $25 billion, which is totally misleading. The $57 billion deal was for Anadarko, which included debt. Number one. Number two, Oxy still has $38 billion of debt. So at the very least, if we want to compare enterprise value to enterprise value, the Anadarko deal was $57 billion. And Oxy, including debt, is now worth $52. Oxy is down 59% year over year. But as I said, Exxon's down 40%. Diamondback is down more than 50%. Continental is down more than 50%. Encana is down more than 50%. You can go through every single major company. The reality is at $40, everyone's worth zero. And so are we going to get mad at a CEO for making a call? When the deal was made, oil was $65. Everyone forgets that in April. So at $65, when the margin from 65 to 40, you lose all of the margin. I mean, companies who did nothing, I would make the case, are just as bad. And I still think consolidation was needed, was required. They liked that deal, made Oxy better. They used their shares. They assumed some debt. They sold some assets, which we forget. They brought in Warren Buffett, who was supportive of the deal at 8%, which actually looks pretty cheap right now. So, I think Cramer is just piling on. I think the discussion in the world is misleading. Oil at 40, everything's a zero. That's why oil can't stay at 40. Gas at $1.75, everything is zero. That's why gas can't stay at $1.75. But there's only one country that can solve this, and that's the United States of America. So we got to start cutting production ASAP. Last thing on the coronavirus, I am on record saying I don't think it's a big deal. And I remain believing that's not a big deal. My mother and I have arguments about this all the time. I understand that it is scary that we don't have a vaccine and that mortality rate could be up to 20 times higher than the flu. I get that. I get that it also hides in a body for 2 weeks before it shows, so it can spread. And that's why the infection rate is like 2. But I still, when you look at the number of deaths, maybe it's because we've reacted so incredibly fast to contain it, but it's just not large relative to everything else. I've gone through those stats, so I'm not going to do it. What I can tell you is the reaction to the coronavirus has exceeded anything I could ever imagine. I mean, schools canceling trips. I mean, these are young people who have a 0.1% chance. And I think the biggest issue is people are worried about being quarantined. I don't want to sit in my house for 2 weeks quarantined. So, everyone's shutting down, not going to work from home, shut down the economy. At some point, we all have to go back to our lives. And yes, there is a risk for people over 60. And yes, maybe people over 60 should maybe go out for dinner less or work from home. I think that's perfectly excusable. If you're over 70, if you're over 80, don't go visit your grandmother in the hospital. Skype, do a video call. I get all of those things. But at what cost to the world economy are we willing to let this virus take hold? Until next week, wash your hands. Be safe, be good. Have a great day. Bye for now.